Recording. Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 8:09 p.m. Eastern Standard Time on a very, very rainy and windy New York City, New Jersey waterfront evening. Looks like we're going to get very serious winds in New York City and my area tomorrow. And hopefully those winds are not the winds of crazy volatility that we have to deal with every single day. And we win through all that. So if it's really nasty, it's going to be supposedly very windy, storm-like conditions, no rain tomorrow in New York City. So it might have an effect on the markets. Believe me, they do. This session will be recorded and uploaded to the YouTube channel tonight for many other terrific members of ours who cannot make it to this session. This is a free webinar, so it's available to everybody. And of course, a big congratulations to all advanced coaching students who put in that extra effort to learn more. And the results of the ACS or advanced coaching sessions with me are consistently seen through some of the few feedbacks that we get from some of our members. So congratulations to specifically the ACS students who are nailing the markets based on my tactical charts, alerts, comments, and such, and others who are trying, and some who need to try a lot harder. That's just life. Tier 1, Tier 2, Tier 3. That's called capitalism. Because if everyone was equal, then we would live in the in some sort of what's the word, utopian version of socialism. But we are not. We are not all equal. Some are better than others. That's called competition. Simple. We don't believe in welfare. We believe in hard work and challenging yourself. Your biggest challenge, I could say these are the basics, but it's a fact. Your biggest challenge is yourself. Your biggest challenge is not the other guy. So focus on improving yourself. I try to focus on improving myself almost every single living minute that I have, and hopefully it's working. On that note, let us begin. This session will be purely for financial education and not for any solicitation or advice. And we are going to go over a whole bunch of stuff. So saying all that, let me cover a couple of very important topics. First of all, it was a phenomenal week overall. Despite the early part of the volatility, which we do not fear, we manage volatility. Volatility is endemic to markets. It is something we might not like because they're sudden. They are within a structure, as I keep on showing on my charts. And the nature of volatility is basically volatile, right? You don't have to be a rocket scientist to figure that out. These charts are designed to... Oops, where is the other one that I was looking for? There you go. These charts are not... regardless of the fake information, which I mean fake, I don't mean in a political way, I mean it in a market way, of the dissemination of news that comes out of the media every single minute that there is no volatility. Look at the VIX, it's lying here at 9 and 10. That's all hogwash. I keep on repeating that because I want all of you people as traders who are trying to improve themselves, more importantly, forget the improvement, try to make money, period. Okay, let's face facts, and stop doing stupid things, which some people do a lot more than others, consistently, regardless of their internal desire to improve themselves. They seem to keep on making the same old mistakes over and over and over again without making any solid efforts to take the step to understand what is going on and to do the trade. And for those people, I really cannot help them, honestly speaking. To me, there's no way you can help those people. The people who can be seriously helped and who will see the results of that on their P&L in the form of large, small, or medium-sized fat green numbers, aka profits, which builds their own confidence, which moves them forward to make more, to incur some losses and then turn around and make 3 to 5 times back more, which we have shown consistently at Clueless Trading. Those are the people that my hats are off to. And I really I'm very, very impressed with many of you. And again, what my thoughts and my feelings are regarding how traders are doing is inconsequential to your success, because because it's you it's your money. I'm just trying to help. So saying all that, the nature of volatility can be seen every single day. This is obviously the NASDAQ 100 futures. This is obviously what happened thanks to Amazon and Google and multiple other great US companies which dominate their field, and not just dominate, they are just growing gangbusters. You're talking about companies which are about to hit $1 trillion who are going gangbusters. And you tell me if that's not a feat of brilliance of our in this particular case tech community. What can I say? It's just beyond impressive. The numbers that they're putting up, these are not financial engineering numbers that they're basically mixing around and trying to enhance their growth through different accounting methods and stuff like that. This is real numbers. This is real growth, and I can assure you they're going to grow a lot more. So all of you bears among you, and many of you are internally as people, are just purely bearish about life in general, but more importantly about the stock markets, which most people seem to be bearish on, whether they admit it or not. I have news for you. This is a pure and simple bull market, and our companies are just unbelievable. If you do not believe that, I have nothing to say. Really, what the numbers are delivering are just staggering. And there's much more to come. So that's number one. Now, number two, the good news is that regardless of many of our members, I don't know if it's many or not, but a whole bunch of our members who basically sat out, and I don't know what they do, and keep on missing every single time, every single trade, and then obviously make some sort of excuses to make themselves feel good. The good news is that you still have a significant amount of opportunity going forward within the next couple of weeks to make some very decent money, in my opinion. Whether they be long or short, you have it. You have an option. You have an option, no pun intended, through options or through common stock to make some very decent money. You keep on missing that. What can I say? Misery loves company. So it's always like that. You go to a bar, the guys are always miserable. They got like sob stories about everything, and there are guys who are just like, "Whoa, come on, man! I'm here. I'm having a drink. Let's have a good time." Well, that's how you're, genetically wired. But it's not permanent. You can switch those wires. What I call mental calibration. Try harder, okay? Try harder. This is not rocket science. It's a lot of it is mental, and the tools are completely in place for you to for all of you to do better, and that includes me. I've said it and I'll say it again. I think I'm still not running at 80 to 90 to 100%. Forget it. Nobody achieves 100% peak performance. Nobody. And so in that case, you're so perfect that there's nowhere to go but down. So it's really simple as that. But I think I have a lot to improve. I mean, this type of stuff that I'm producing, this is the content that's coming from me, Frank, at Clueless Day Trading, is in most cases, obviously, staggering. And through forecasts, through predictive charts, through analytics on market policy movements, how the markets are going to react to certain moves on the policy side and stuff like that, which I explained very clearly, I should be doing a lot better, a lot. So it's life is about constant improvement. That's the way I look at it, both in our personal lives and in our work lives, and in this particular case in trading. So it's not a pep talk; it's a reality. So I am, like I said, sometimes when I talk to people and they start telling me about what they did wrong and this and that, was so good to hear. But honestly, I can write a book on every single excuse and every single thing that I've heard from anybody out there, from my good old Wall Street days to now. There's nothing new. It's always the same old story. Like I say, there's nothing new. So so saying all that, there's I think a solid opportunity for the next couple of weeks as earnings keep on going to make some very decent money. But in order to do that, you will have to understand um, the nature of the characteristics of the charts that I'm putting across, the volatility moves that come from nowhere. Because remember, volatility is not in nature is designed to, by its nature, is designed to confuse, confound, instill unfounded fear, and force human traders to do the stupidest things ever. That is the nature of volatility. And these are very fast moving. I mean, very fast moving. And then you see that in the face of, look at the zigzags. I mean, this zigzags, looking back at it, oh, it's a really minor little red candle. Well, I can assure you that many of you were freaked out when the market just dropped 15 points and your stock was down $1 in about 5 minutes, and without keeping an eye on the broader picture of what was going on. So these are all your own emotions. Like I say, charts are nothing but a manifestation of human emotions. In this particular case, massive volatility created by machines known as high frequency trading black boxes or supercomputers to keep on messing with your brain. Keep on messing with your brain. So what we try to do with these structured charts is put parameters in place, going back to the basics, so you know pretty much where the downside can be, what the upside can be, and that basically translates into where you buy and sell. It's really as simple as that. Now, when volatility is hitting the markets on a very fast rate every single day, starting off at 9:30 in the morning and pre-market, but in this our case, from 9:30 in the morning, it puts us at unease sometimes. And it doesn't feel good when you're up on something and then within about 10 minutes you're down on that, or you're not in a position and you're seeing that go up by 400%. And I'm not going to talk about huge performance numbers because that's going to take away valuable time from trying to help you all. That's all there on my Twitter feed. Remember, this is the real deal. We don't lie. We don't make up stories. We put everything out there for everyone to participate in. And you can go back and check every single thing going back to April 15, 2014, when I started my service. So we're not in the business of making up all kinds of long-winded stories and not having the proof and the performance right there for people to look at. Okay, so just keep that in mind. As I'm talking to you, I'm just basically playing around with a little bit of the charts, and as you're listening to me, and I'll keep this part reasonably short, but it's important. Going into next week, we have a lot of stuff going on. Okay, and I will be putting up I'll be putting up the what to watch for next week. And it's major earnings. We have Apple, we have Facebook, we have Nvda. That's the week after. I believe it's the 9th. We have whole bunch of companies. The big names would obviously are on Thursday. I'm looking at one of my other screens at the earnings coming out for this week. And it's last week was extremely busy. This week is going to be very busy. Okay, that offers opportunity, and so we have to be prepared. And your preparation needs to translate into action, not just a spectator sport. Okay, you don't have to gamble with big money. You don't have to basically trade like a maniac on one stock. You just have to act on the positions as much as you can within your means. It's really as simple as that. But to sit aside and do nothing is the biggest trading sin that many of you are right now, in my opinion, are doing. And it's no good. It's no good. I'm scrolling through like, wow, look at this number of earnings. A lot of companies we know, a lot of them we don't know. And of course, on Thursday after the close comes, let me see here. I think I was looking at, there are so many. Was I looking at last week? This week? 1 second here. I was looking at this week today. Okay, so we got that. We got Fed speakers. We have very, very important. We have a possible announcement of the next Fed governor, the head of the Fed. Most probably, it's going to be Powell. Um, and I put out some articles on that. If you want to know a little bit about what's going on around you, quickly scan those articles. And we have looking for that thing here. Bear with me. So we have between earnings, economic. That's real important. How the markets and especially the bond markets are going to react to the nomination of Jerome Powell. I believe his first name is Jerome Powell. And so bottom line is that it's going to be it's going to be really, really it's going to be volatile, no question about it. The upside is intact. We're going to take a look at that. And these are the futures right now as we speak. Futures are down about 3 points. This is exactly where we are. This is what I projected. This is where it went. And what can I say? It's right. That's it. Well, there's big patterns here, which we identified. Trading ranges we broke out of. These are those crashes that we get once in a while. This was as recently as Thursday. And what day was Friday? Friday was the 27th. Yeah, this was Wednesday. This was the Thursday crash. Sorry, this was the Wednesday crash. The recovery to Thursday, and this was the big fat breakout, which was actually a lesser breakout than what the Nasdaq did. So just just be ready for a lot of movement. And let's get into it right now. Any quick questions on the first part of my comments? Nope. Okay. Second comment that I want to make as we're talking about volatility is by now, you guys should be really, at this point, you guys have absolutely, by this point, I know a lot of you are getting better and to really understanding something which you already know from day one, but you refuse to accept, many of you, is markets don't go up in a straight line, guys. All right. Markets go up, they move up in a zigzag manner through all these different patterns and this and that, as you can see, and they fall the same way too. And technical analysis mixed in with the clueless day trading structuring of charts gives you an exact roadmap of what will eventually happen. And along the way, you have to somehow start to learn how to manage your trades. There is no perfect method to manage a trade because there is no perfect way. Somebody can tell you that in 15 minutes, the markets are going to zigzag around and put people on that monkey on a hot tin roof type of mode. There is no way to tell. But as long as the levels and the patterns are intact, you need to stick with that trade, long or short. In this case, particularly on the long side, where most of the money is being made. These are flash crashes that happen time to time, exactly as it happened back on the 18th of October. And supposedly on the 19th of October, they did the market the algos decided to basically say, okay, let's put a little bit of fear in the markets because it's its 30-year anniversary of the infamous October 1987 crash, which wiped out 25% of the stock market, which was like, whoa, forget about it. All right. So that's obviously history. So that was one of the reasons. There was other reasons. There's always going to be reason. There's going to be Catalonia breaking away from Spain and blah, 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 blah. Do these have economic impact? Sure they do. Sure they do. It could be a tweet out of Donald. It could be a nuclear missile test from North Korea. It could be some major policy initiatives on the tax reform stuff. Senator Kevin Brady, who I basically said, you know my opinion. I'm sure he's a great guy, but a complete moron when it comes to putting some of those policies. He was the one with the border tax stuff. Yeah, great. That's going to really work for America. Remember, when you make somebody, an average person out there, a voter happy, it doesn't necessarily mean it's great for our country. All right? We all know that. It's great to have democracy and have everybody saying, okay, I'm going to put this, put somebody in power, and but but that person is going to try to make you all happy. It's not always great. You got to manage it somehow because it's a two-way street. You got to work hard, and the government has to deliver in the form of powerful business initiatives and policies like tax reform and stuff like that, which I think they're doing about the right way. So this gentleman comes along and he says the border tax. Remember a few months ago? Anyone remembered that? The border tax thing?
Yes.
Yeah. Overall, it's the most destructive thing for American business that could have been done. So guess what? They threw it out because they realized that. Because what makes America really great is not all us morons, believe me. What makes America great is American business. Now, whether you like it or not, just take it and just, like they say, just keep it. All right? American business is what makes America great. And American business is here to help America. Not some guy sitting in New Jersey, not some guy sitting in Alabama, not some guy sitting there moaning and groaning how bad everything is. All right? And this is coming from a guy, trust me, who has very strong feelings about a lot of stuff. Not an extremist, but I have very strong feelings because I believe extremism in all forms, religious and political and economic, is absolutely fatal. Absolutely fatal. And that comes on all colors, creeds, and religions. So in business, it's the same thing. You take extreme business policies, you're going to get completely screwed. So border tax got dropped. So this guy comes out again, and he's part of the tax writing committee. So you got to give, obviously a smart gentleman. And then he comes out the thing saying he's looking to basically raise 401k. He's cut the 401k contribution from 18,000 overall to 2,400. Whoopee! What a brilliant idea to raise, because they're trying to make this whole tax. After all, when you cut taxes, less money is coming into the government, so the budget deficit is growing. So they're trying to make it somewhat revenue neutral. Anyone understand what revenue neutral means? Anybody wants to, what does revenue neutral mean? What does it mean in simple English? What is revenue neutral when you're doing a whole budget?
What goes out has to equal what's coming in.
Thank you, sir. Thank you very much. Thank you very much. Swimming the markets. Absolutely. What goes out must equal. Well, it doesn't always work like that. Deficits work if it's the right way of doing things. America has always had a deficit. You can balance the deficit in a certain way. But the point is that you can't be like, oh, we can't have any deficit. Debt is bad. That's garbage. Good debt is not bad. If you are creating a deficit, which is going to spur economic growth, then you have higher servicing power to pay back that deficit. Runaway deficit is bad. So it depends on how you are creating the deficit. If you're having an economic stimulus that's going to grow the economy 3-4%, and we're running at 3% right now, very impressive. It's a law of large numbers. We're never going to grow at 7% because we're a very large economy. I can't remember the exact number, but we're at what, like 21 trillion or 22 trillion US GDP? I'm going to look it up right now. So the bottom line is you can't grow at 7%, just the way a $1,900 stock can be going up 20%, but a $20 stock can go up 20% or $4 and no one blinks. But if a $1,000 stock goes up $200, everyone blinks, right? Yes?
Yes.
Exactly. So it's a law of numbers, which the most people don't seem to understand. Our gross domestic product, I was a little bit higher. Maybe I'm a little too optimistic. Is around 19 billion. Oh, well, no, that's 2016. US GDP was 19 trillion. Trillion. Okay? Trillion. So we are right now at a level of 18.57 trillion. So we are right now close to 19 and a half. 1 second. We are currently at 1 second. Our overall GDP is now running probably, yeah, I was right. It's probably around like 20 trillion. So you don't expect it, it's a 3-4% growth. So this gentleman comes out, says 401k thing, no good. Because not only will it affect Americans who are trying, who are being incentivized to save, it will also hurt very much, because that money going in automatically going into your 401k contributions as you elect, how much you want to put it in there every year, up to the legal percentage. All of a sudden, there's less money for those pension fund managers and to go out there and allocate that funds towards the investment managers who put that in productive uses in buying American companies and their stocks. It's a terrible idea. Well, guess what he did? He completely reversed his position. Thank God. Okay, because it was such an idiotic idea. I can't even tell you. And now he says, now they're saying that they're looking to increase. He goes from like, I'm looking to cut it, to increase the contribution limit. Good stuff. Business will always win. Political dogmatism, in due time, yeah, it wins both sides. It wins in the short term, but in the long term, when you don't have a job and the companies are not hiring, and the companies that hire are U.S. businesses, small and big, then all that political dogma goes out the window. All right, gotta have food on the plate. So anyway, so those are types of news that when they hit the market, they also cause. Oops, sorry there. Those are the kind of news when this is Amazon. Hello, you know. Just look at that. I mean, and I know many of you were in it, so you know how it felt. This is just it's not ridiculous. It's just beautiful. Okay. This is just the sign of beauty. This is where it says like, see you later, guys. It's over. And then many of you who just did nothing or whatever. I'm not gonna pick on anyone. Obviously, it's my business not to pick. It's just terrible. This was the opening, and it climbed another $44 and higher. And these were the charts drawn well before it happened. So go figure. So anyway, not to distract. So we get these policy news coming out. That's going to be coming out this week. Wednesday, I believe, is going to be sort of a final version of the tax reform proposal, which they're looking to pass on November 1st. Oh, hold on a minute here. November 1st is, I'm really losing my head here. November 1st is Wednesday. No wonder. November 1st is the date that the GOP has put, that's the day that they will put the stamp on the tax reform proposal. And they will. So we got a lot of heavy duty stuff coming out. All right, so just keep that in mind. On that note, let's look to see what's going on. So what's going on is what I keep on putting out there. Each of these lines are your this is your resistance lines, and these are your support lines. When you break through a support, when you fall below a support line, these are obviously bigger support lines because this was a breakout level. By now, many of you should be able to read this. I even put a lot of arrows on those major inflection points before we buy them, so we can act on them. So I always try doing that as much as possible. I can't just be putting in. I can't be a pro trader, a tactical trader, and just be a arrow monster all day long. But I try to help people as much as possible through putting these out. So when a support breaks down below a support, that becomes resistance. So we break through resistance, we go above. This was previous support. We break above, and this type of stuff happens. And that's why the S&P 2570 calls, which expired, which I was telling people to get into, the 2570s for many days, just on Friday alone was up 737%. What does that mean in simple English? It means that the day before, on Thursday, it was $1.35, and it went to almost $13. If you think these numbers are something to say, well, yeah, that's a nice number. I always laugh when people say, oh, that's nice. That's nice. Wow. You guys must be born with like 90 silver spoons and 5 gold, whatever chains around your neck. I wasn't. To me, that's like, whoa, that's money. I don't care whether you have 1 call or 2 calls or whether you have 10 or 20. So when people are not impressed by real huge numbers, Nvidia 200 calls, the November 27 lottos went from 13 cents to $1.84. That's almost 1,300%. That's nice. Well, thank God I wasn't born into like huge wealth and stuff that I saw big money and I said, oh, that's nice. Come on, guys. It's time to wake up a little bit. I don't know what world some of you live in. Amazon, the 1030 calls, highlighting just some of them, okay? Just so you can, and it's all there on the Twitter feed. So go take a look at it. And if you don't want to look at it because it's painful, because you didn't bother to buy calls, S&P calls at $1.35 for whatever reason, or Microsoft calls, which were very cheap at 39 cents, that went to, they were 39 cents when initially bought. They were at 26 cents. They went to $4. Okay, and the end of the day up. So they were up like freaking from 30 cents to $4. You're looking at, you tell me, 1,100% plus. And these are lottos, for God's sake. They opened at 215, and then Microsoft kept on climbing before it eased back a little bit. It still was up big. You're looking at, so point is, get that, oh, it's nice kind of thing out of your head, all right? These are awesome. And they don't come every day. They only come if you have some sort of position in them. And this is not the first time. This has happened a lot. This has happened a lot. This has happened from this level, which was consistently posted as long tail hammer reversals. Exact pattern symmetry off the lows at approximately 10:30 or so when it started on Wednesday. So if you are not on Wednesday, yes, it's like noontime, 11 o'clock. Excuse me. And then the jostling around on Thursday, that what we call a volatility cluster, and then this. And I explained both ends. I said this is a head and shoulder. This is a head. This is your left shoulder. This is your right shoulder. This is your right shoulder. And the bottom line is, in between, you had an inverse head and shoulder, where your left shoulder was here. Left, right. Let me do this. Left, right shoulder. A little bit, shoulders don't have to be always like exactly on the same level, but you can see big head. This is extremely powerful. Exact pattern symmetry. Long tail. See the tail? Long tail hammer reversals. You don't question those things. Now, the long tail hammer reversal basically in this particular case went up, closed here at the end of the day. This was last week. This was last week. This was on the 18th. This was, the week prior to last week. And then it just shot up. Anyone remember why this shot up like this? It was, I believe, if I remember correctly, the jobs data, right? The jobs data, and then the tax thing, and all that good stuff. So this pattern had a high probability of replicating. No guarantees, but I did tell people straight out as a warning too that we have to be that if that's why I put this little arc here. Right? Here's your head, left shoulder, head, left shoulder. Markets are purely mechanical. That's the reason why these charts are so phenomenally accurate. Just so you guys know that. Okay? They're no longer like random walk through Wall Street. That Malkiel wrote that famous book that was the Bible of Wall Street for years and years. Back, when did Malkiel write the book? In the 40s, 50s? I don't remember. We were forced to read it. It was just like, okay, great. What did I know? There's no random walk anymore, guys. There's nothing random. There's structured randomness. That's the new word. We call it the new normal. And the only way you can understand structured randomness is by tracking these charts and acting on them as needed. Because every single upside, downside, sideways level is shown in most cases prior to them happening as to the probability of what will happen. That's how you manage your trades. And we're going to go through stocks today too. That's how you manage your trades. You don't manage your trades by what you think. What you think or what I think is meaningless. Get that through your head. It's meaningless on a company. Yeah, you're allowed, of course, a free country, you're allowed to have your opinion. Your opinion means nothing. And when the earnings come out and the stock basically initially drops and then just jumps up like 10, 15 points, it's happened repeatedly. You're like, what happened there? Like, they had bad numbers. Yeah, right. As if you're some sort of big shot analyst sitting there. And I find it to be amusing where you're trying to overanalyze things. Don't overanalyze things. Try to be as much of a robotic technical trader, whether it's in after hours trading or whether it's in a movement after earnings. Don't try to overanalyze things. Sometimes it's a real miss, whatever, stock goes down exactly the way it was. That's different. But in most cases, and I've been doing this for a long time, I wasn't a trader when I worked on Wall Street. I was analyzing a lot of stuff. We were putting in decisions on putting portfolios together for medium to small pension funds, institutions, and high retail net worth clients, what we call big money. Okay? So the bottom line is, I read through a lot of stuff, and I realized it doesn't mean anything. You're sitting there, oh, the PE is so high, as if you know what a PE is. It should be. I've said it before. I'll say it again. You own a growth company. What is the measure of the valuation measure on a growth company? Can anyone tell me? PE is your old-fashioned way of saying, okay, price to earnings. Anything above the 20, 30 is really bad. Like, oh, it's really overvalued. Yeah, right. Like the market P is at 19, so the market should just crash and burn. Okay, exciting. Can somebody tell me, everyone's heard about price to earnings, correct, guys? This is really important for all of you to start changing. The only reason I'm doing this, just one second. The only reason I covered this stuff. Look, I'm putting out charts right, left, and center. I want people to be successful. I want people to take their lumps when it's needed and then just jam the pedal and make a lot of money and come back and say, you know what, I really want to learn this thing or a little bit more. One guy, I'm not going to name name, he's one of my favorite guys, says, you know what, I really want to understand this tactical trade. I've been with you for almost a year now and I never bothered. And then he hits some good ones, like Amazon and stuff. So all of a sudden, rightfully so, his confidence is up. So he wants to learn. But overall, when you're too smart on whatever you think you're too smart, like they say, in this business, then you're a lazy bum because you think you just know it. So what happens is you make a little bit of money and then boom, 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 you lose a bunch. Your confidence is shot. You're finished. Doesn't matter what's given in front of you. Like what the charts and stuff that I'm giving in some of these alerts, it's like free money that I'm just saying, okay, guys, just pick and choose and you got to go for it. Yet so many are just sitting aside because their confidence in many cases is shot. But the only way you can build up that confidence in a positive, in what I'm saying is positive reinforcement, you need to be a little bit more technical. And your confidence will be there. Doesn't mean you're going to have some, the sidewinder missiles that hit us here and there. All of a sudden, the stock will fall like $3 or $4, but it'll get to where I'm saying it's going to get to if it's that type of company. I'm not recommending or suggesting companies which I think are going to be just which are just going to die. Sometimes we're wrong. Sometimes we think it's going to move higher, like CMG, looking fantastic. And then they come with earnings, boom. Now, whether the stock's going to turn or not, I don't know yet. But the point is, I'm not going to waste my brain energy on worrying about that now when there's so many others are delivering the goods. There's always going to be one or two of these blow-ups. Absolutely. We can't help it. That's business. So saying all that, coming back to this, the only reason I'm doing this stuff, I'm trying to help you guys mentally recalibrate. I don't think any service does that. So I'm not going to go in there and have some sort of serious psychological intervention and put you in a little bunker and then see you every 3 days and feed you charts, not food. Okay, that's not what my goal is. My goal is to basically win these coaching sessions, and this is supposed to be a basic one, so I don't want to get in too deep. Is trying to have you mentally calibrate a little bit, change some of these terrible, terrible, awful, garbage habits that many of you have in the way you look at the markets and stocks. With some people, they change very quickly. That's personality. And with some, it takes a long time. And with some, they never change. So let's move on. So the PE, everyone knows what a PE is, right?
Yes.
Okay. So what is a PE? What does PE stand for? You said yes.
Price earnings.
That's right. Okay. So just asking, So price to earnings. So you take a price of a stock, you divide it by per share earnings, and you arrive at that number. The way so what's the measure for a company which is on a fast track growth phase, which most of our tech companies are? It is called PEG. I already wrote the answer. It's Trent said Trent actually tried to give the answer. He said PEG. Yeah, it's price. No, it's not price divided by growth. It's price to earnings divided by growth. So if the price to earnings is is running at 20, okay, and the growth rate is running at 40%, that means it is running. What is the PEG? It is half, right? It's 0.5, correct?
Right.
Yes. 20 divided by 40 is 0.5, correct, guys?
Yes.
Okay. I just want to validate because sometimes people like, believe me, I've been anyway, it doesn't matter. So yeah, seriously. So half. So remember, any peg on high growth companies, when you're looking at some, and it's good to always, self-educate yourself. You're looking at the balance sheet, and if they're mentioning the price to earnings, and they're growing at 50, 60% bottom line, and you look at the peg, any of these major high tech companies with a peg ratio of less than 2 is a buy. So that means if their price to earnings is very bloated, according to standard methods, at let's say 40, at 100, their price to earnings, people are, oh my God, it's 100 PE. Yeah, right. Okay, great. So and then their peg ratio is 2.5. That is considered to be high, very high. All right. Your growth rate has to match, generally speaking, the actual price to earnings of a company. Your growth rate has to match the multiple of what as a investor is willing to pay for your stock price. So if a stock price of a company is 10, right, and the company is growing is growing at 20% a year, 20% a year. So their PEG, what do you call? Then so somebody is willing to pay roughly 20% more, not multiply, growing at 20%. Somebody is willing to pay 20% more on an annualized basis for the price of that stock. So they're earning at sorry, let me get this thing right here. So the stock price is 10, and it's the PE is let's say 20 whatever. So you're willing to pay $12. You're willing to pay $12 for the price of that stock because the company you want because that's what it's growing at. Is everyone clear about that? That's a general rule of the thumb, that you are willing to pay the multiple of what a company is growing. I don't know if any of you have been business owners, but if somebody wants to buy your business, they'll look to see how much you're growing, and they're willing to pay you a what's the word I'm looking for? A multiple of whatever your growth rate is in order to buy the company, because that's how much cash it's basically discounted cash analysis. So they'll basically look to see how much they can make off your business 5 years down the road. So coming back to it, without getting into that stuff, is when you look at a growth company, look to see if anywhere where it says what their PEG is. You can Google it, can find it. And again, you don't need to be too much of an analyst. That's why I rely on charts. So let's move on from there. So at this point in time, we are looking at this is where we are. And so where do we go from here? You had that right shoulder. I was looking to see throughout the day whether or not we would punch through it, given the size of this candle, given another hammer reversal, which occurred, and I just, occurred at right before the market opened, and this hammer. There was a high probability that the second candle would pierce through the right shoulder. That's exactly what it did. So now we're kind of overbought. Now this is the S&P that I'm showing you, and I am looking at but then I have this channel drawn. So you don't have to really do the hard work. Let me do that. You just have to basically track it. So here's your acceleration channel. And based on this acceleration channel, the high on the market is around 25.92 on the E-minis, which is roughly 25.97 or so. I have a blue line drawn here. That means we can go to about 25.93, 25.94. That translates into 2600. It's a very, very high probability. We're going to hit 2600 and slightly above that this week alone, which is not much. We closed at 21,581. 19 points from here is 2600. We're looking at roughly 114 points on the Dow. We can get 114 points on the Dow in between some back and fill. You guys agree? Yes?
Yes, I do.
So there you go. Now, is 2600 the end of the world? No. Believe me, we can overshoot that quite easily. So the round figures you have to keep in your head is the market is targeting at this point. The market is targeting the first round number, which is 23,500. And no reason to get like uber bullish. We're at 23,434 on the Dow Jones Industrial Average. To get to 25,000, which no one could have imagined. Do you know the only single guy who said that we would get to 25,000 on the Dow Jones by this year? The only guy who said that? Anyone remember?
No.
He's not a Wall Street analyst. He's an economist. Older guy. Dr. Jeremy Siegel. And they laughed at him. They laughed at him. He said, oh, he's like, total uber bull. He just. So we're at, by the way, we're at, sorry, I stand corrected. We're at 20, I'm like losing track of these Dow Jones numbers and nobody corrected me. That's great. So I'm a fool and you guys are greater fools. We're at 23,434, right?
Okay.
On the Dow Jones. So we're looking at another roughly 566, 566 points or so before we reach 24,000. We're not at 25,000. So see how we all get, because these numbers are getting bigger, we are all getting kind of confused because I'm thinking we're at 24,000 and change. We're not. We are at 23,434. But just to make a point, this is what happens. So again, when you're looking at my charts, this is what I'm doing for the next couple of minutes. I'm going to scan through a whole bunch of charts. When you're looking at my charts, you know exactly where the market can drop to. This is the nature of volatility. Simple. No more excuses for any of you to like, oh my God, the world's falling apart kind of crap that you see when rooms like dead silent. I can see people there, but nobody says anything, which is completely fine, actually. The thing that we do not want from a psychological standpoint in the market is pure euphoria. We are so far away from that keeps me happy overall, because nobody's really happy. Most of people are miserable overall when it comes to trading, and very few are really ecstatically euphoric. I'm not.
I think the Fear and Greed Index is at 70, and about 3 or 4 weeks ago was like 90, 95. Correct?
I actually don't look at it anymore because it's a false signal. It is a false signal. So if you notice, Tom, I haven't looked at it. I haven't posted it because it means nothing from what I can see. Because the fear and greed index is really basing itself on the VIX. You understand what I'm saying? The VIX used to
Yes.
be, yeah. So here, give you the real answer. The VIX, even now, I can tell you that the trader pessimism and trader regret and trader fear in the markets is extremely high. If anyone begs to disagree with me, I will tell you you're wrong. Very high. I see that among our members. And we are a small section of the trading community. And we are the so-called tactical section of the trading community, right? And even here, we have high levels of pessimism, no euphoria, massive regrets on missing out consistently. And if somebody tell me I'm wrong on this, I don't need to know an answer, but I don't think I'm wrong whatsoever. I know how traders feel. I can go, whether it's the chat room, whether it's the overall tone, whether it's involvement. I just know traders in general are miserable because most of them have done nothing, and and some of them who have done something are not doing what they should be doing. So there is no euphoria in the markets whatsoever. Every time you turn the TV on, they're telling you how much we're going to crash. Am I right or wrong? Is that not what you hear? Look at stock twits overall. Just an example of like mass psychology. See, even on the most powerful moves on the market, more than 50% of the so-called smart guys on stock tweets. The smart guys on stock tweets are supposedly the futures traders, right? Because they are reacting to market conditions rather quickly. And there are a lot of smart guys there. And consistently bearish. Consistently bearish. There is no euphoria, guys, which is good news for many of you and me, that we have an opportunity to continue to make money on the long side in between corrective pullbacks. So you do, all of you who have basically done nothing, not all of you, shame on me, some of you who have basically done nothing now can smile and say, I can do it. There's still room left. There is still room left. Am I clear on that?
Yes.
Thank you. And believe me, I know. I'm not talking technical stuff. I'm talking psychological. We work on the fifth wave right now. This is where the excitement starts. And the ones who come in at the way at the tail end are the ones who will basically be decimated. We are on the second inning of wave 5, which will continue through to the end of the year. Just letting you guys know. Be happy that you still have time. Forget about all the stupid stuff you've done in the past. And that includes me sometimes. All right? Just forget about it. Just focus. Just do it, guys. Just get sick of yourself for doing the wrong thing and not making money all the time. Just, really. And if you don't get sick of yourself, you're going to be a rotten trader. Seriously, I'll tell you that right now. If you're not angry at yourself, then you are just, if you're not angry at yourself for sitting aside, missing trades, not doing 40-cent options that go to $3, $4, like Microsoft, for God's sakes. I mean, this is not like some high level, like paying up a arm and a leg like we have to on some of the bigger stocks. This is like lottos of extreme cheapness. So anyway, so that's it. So this chart, just when I'm putting it up there, you just need to just do what you need to. This is the acceleration channel, and this I think is going to be point of maximum short-term move higher for now, and then we shall see. And this is the 1-hour chart, so I'm not like going out weeks and weeks. We'll take a look at that in a few minutes. So so I can draw. This is a very powerful move here. Things have a negative bearish trend change if we break below 25.62, and that is clearly visible in the form of this neckline. Remember, this was a head and shoulder. When we broke this neckline on that impulse sell-off, just this last Wednesday, then this is what happens, right? Now, this is obviously extreme case, but still. But that all lasted for a few hours as the market opened, and there was a huge buying opportunity to be had. And that was all alerted. You can see that on screens yourself. These are all long tail reversal hammers, which means the big shorts are covering. And this is the same old story over and over again. So at this point in time, has this entire very powerful head and shoulders been completely negated? Well, looks like it's negated, because this was your left shoulder, your right shoulders. That's why I put these little stuff, right? So you can kind of use it as a quick tool. Shoulders, okay. This was the big right shoulder. It was taken out. It will come back and retest it. That's exactly what the markets are doing. Remember, this is a live chart. This is what's going on in the markets right now. But as long as the uptrend is, uptrend line remains intact, and more importantly, this remains intact, because once we fall below this, say for example, remember that's 10 points, so that's roughly about 70 points on the Dow or so, 60 points. If we fall below this, I don't need to give you like an explanation. You can see at that point by the pattern, if this happens, that again we're going to come down and test first these two major green lines, and if we break below this trading range that we broke out of, then we are going to fall back to the lower end of the trading range. Any questions on this, on people trying to like understand this particular chart?
Nope.
Feel free to ask. That's what I'm here for. Now remember, this was the trading range. The previous trading range was down here, and these trading ranges last a bunch of days, not years, right? This was your previous trading range. Anyone remember that? It seems like years ago. That was just in September, mid-September. This was your range breakout. Move real fast and furious. So if you're not positioned somewhere around these levels, you missed out the whole thing. Once you moved into here, it created another trading range. There you go. That trading range lasted from the 5th of October. Repeated attempts to break out, failed, zigzag, and I will admit, like I've said before, that these are the harder days to trade because it's in a very tight trading range. They're moving stocks around up and down, breaking nothing, so it's not giving you a clear direction whether you want to be really short or really long. But overall, looking at my other charts, looking at the overall stochastics, this is a simple one, obviously. I kept on saying upside intact as long as we held the mid-range and the low range. That is exactly what happened. We broke out. This is the only way you can manage your trades, because that's a question I get from a lot of new members and stuff. How do I manage my trades? The only way you can manage your trades is by understanding the external backdrop. I mean, the back, of futures and e-minis, because these are things that control your trades on the front side. That's the only way you can manage to stick in a trade, close your eyes, said, okay, nothing's really broken. He's putting these charts out. He's saying the upside is intact. Let me take a quick look at it. Your brain says, okay, it looks good so far. You don't bump out of the trade. And the next day, boom, you get that 3-point move. Whether it be Alibaba, whether it's Nvda, whether it's Apple, whether it's Amazon, Tesla at certain times, but Tesla's on a major downtrend right now. But I'm still scared to short it. What do you call? That's my opinion. Anyone else can do what they want, and things like that. But so at this point, as long this trade, we are no longer in a trading range per se. Yeah, I can say this is a trading range. So that trading range is right now 2560. And in due time, as you get used to looking at these charts that I'm putting through and looking at the levels, it's just going to help you on the front side. That is the only thing that I can guarantee. So here's your trading range. Now the trading range has lifted up, and that trading range is 2578, rounding off the numbers, and 2560. That's 18 points. That's 18 points on, 1 second, guys. 18 points on the 18 E-mini handles. That's roughly 108 points overall, which was exactly the case here. So here it's roughly 108 points on the Dow plus minus. And it's going to be, if it's going to track this range for, let's say, a good portion of the week, it's going to do this between these levels. If the market really wants to go bonkers, then it's going to basically break out of this again very quickly by Monday or so, and it'll hit the lower end of, and it'll try to enter this acceleration channel. Now it's earnings season, so we've got a lot of juice there. Some of these companies might just be like huge. We got Facebook and stuff, which might be. We'll take a look at it. So that's number one. I'm done with this chart for here. This is your volatility channel. These are big channels, right? Drew this weeks ago. We hit exactly channel number 2 right there. Look at that. You can make these things up. Look at that. Pull back. Here's your channel. It's a little bit messy with the points, but I'll put it here. So I have an arrow here. That means that we will most probably come down here, and 90% of the time, this is exactly what the market does. It comes down here. Hi, Nvda, I didn't see you. So welcome. So then it'll come down here. It'll do this. The markets are really funky these days, guys. Okay, it pisses the crap out of me, just the way it pisses the crap out of many of you. Like, you just come in and all of a sudden, it goes like boom, boom, boom. Like, oh man, I know that feeling. Come on, I do this with you guys too, right? We're all in the same boat. Can't do anything about it. So you look to scale in. So if we break very rapidly below this channel, then you can do a quick short trade. Sometimes the moves are so fast. I'll be honest with you, I can't even move into that trade. Because within seconds, it'll be like, boom, 4 points down on the S&P. That means down 24 points on the Dow Jones. I don't have time to react. So I just sit back. So sit back. That's why I say sometimes, when it's too volatile, sit back. And if you're not at the trading screen, good for you. I'll keep on learning. Because remember one thing about my service. I never walk away from you guys. Never walk away from you guys. So the only thing I ask from you guys is that when you feel like, especially I know how it works, when you make money, all right, of my hard work, then have the decency to give us a big shout out on other trading forums, wherever they may be. Pass on the word to your friends. Get some referrals. Write a short testimonial feedback on the website. These are not requirements. These are just requests. That's the least you can do. It's called decency, guys. When somebody's making you that much money with their hard work, then have the decency to give them a shout out. It doesn't cost you a penny. And many of you do. And thank you so much. Because I don't do like big budget digital marketing, which I should. I'm working on it. Because these are staggering numbers we're delivering. But some of you are just asking you straight out. I don't need to ask people. Well, sometimes I remind people. And many of you do. Some of you do. And many of you never do. And I just scratched my head and said, wow. But then I don't look at life with some sort of like, apple pie thing. Because people in general they're not bad people, but they're ungrateful. So I'm not asking you to be grateful to me, but give us a shout once in a while. All right, guys? Let's have a friendly deal on that. And especially when you make money, then you should really do it. So let's move on. So on that note, this is a very vital chart, in my opinion. We have an uptrend line here in the form of this blue dotted line. So the next time that you see me put this chart up during the day or pre-market, whatever the case may be, watch this line. Because this uptrend line, where the market was traveling above that, and then that broke and then this happened, the market right now is trying to get back. First, it got back in this channel. So that's the first thing you watch. Look at the Bollingers. Lower Bollingers moving higher. Upper Bollingers still moving up nice. The market at this point is attempting to enter above this uptrend line. And that's why I have this line right there, just 25.85. If the market can attempt to and it's a high probability it will go above this downtrend line. You're going to see another one of these candles, guys. And what are these candles? These are big, big short covering, new money coming in. Like, oh my God, why the heck did I short the market? And a lot of the hedge funds died on Friday. I'm literally died from a trading perspective because they were all short. What do you think, Google, Amazon moved up 100 and how many points? I don't even know. And Google exploded, It's not because old, fresh, new money. What, nobody was invested in Google and stuff? Because a lot of these hedge funds who are supposedly like really smart were all on the wrong side of the picture. They were all short. And I could see that right before Amazon exploded. And I'll show that to you right now. I could see that. Now, if you went with that, you'd never made money. If you went with the straddle that I posted, you made decent money. This is what happened. They got murdered. Billions of dollars. I'm sure some of them are right now like, because some of these hedge fund guys are like real nuts. You know what I'm saying? These traders, I've met some of them. I know some of them, and they're just nuts. So their big bet on shorting Amazon and Google, because nobody was saying anything great about them prior to earnings. All right. Amazon, Google, they just not only lost their jobs, they're probably just right now, I don't know what they're doing, because that was dramatic. You got it? That's one of the reasons why it moved like that, because stocks don't move like that. A big cap stock like that doesn't move up almost 9% or 10%, whatever it moved. It actually moved more than 10%, right, guys? Yeah, it moved more than 10% because it was 990 and it went up 128 points. Was it 990? It was 990. 990.
980, something like that.
Yeah, it was up more than 12%. The stock doesn't move 12% like that, guys, just so you know. That's because these hedge funds were all on the wrong side of the coin. So next time one of your hedge fund buddies or whoever it is says, hey, you should really short this stock and stuff, tell him to take a nice walk. Because 90% of the time, these guys are wrong. And they're so-called smart money. Believe me when I tell you. And they've been generally wrong in the market since 2009. Because they've always been shorting the market on every move higher. Okay, so they were clear about this chart. Every level is marked, arrows and stuff. And this is what we're looking at in short term this week. We're good. Let's move on. This is the same chart, so nothing to replicate. Let's look at, this is NASDAQ. Oh boy. NASDAQ's going higher. Now, if NASDAQ's going higher, what's going to propel NASDAQ higher, guys? That's going to be money in your pockets this week. What are the big boys on the NASDAQ that still haven't really made a big, big, big move?
Apple.
Apple and Facebook.
More than Apple, Facebook. I'm sorry, what was that, Nicole?
No, I said Apple and Facebook, I thought, no?
Yes, Apple and Facebook. You're absolutely correct. Now, why, generally, fundamentally speaking, why does Facebook have a higher chance? Because Google's digital advertising business went bonkers. Who is the master of digital advertising? Facebook. And their business is growing very rapidly. Multi-segments of their business, without getting too detailed.
Mm-hmm.
And somebody on Bloomberg, because I like listening to Bloomberg, there's some of these analysts like really, really smart. Bloomberg's like the smarter version of CNBC. CNBC is like the wild, like a lot of fake stories and stuff. Bloomberg's like very factual most of the time. You know what I'm saying? So I have both Bloomberg and CNBC. I love watching CNBC because I always need to know like what they're talking about certain things. And sometimes they bring some brilliant people. So what do you call? But Bloomberg, somebody mentioned was giving a discounted analysis, and they basically said, analyst, and I just hit my head. He said Facebook on a valuation basis is the cheapest compared to Amazon, Tesla, Google, and Apple. I said, wow. No, Apple's the cheapest, but Facebook is the fastest growing and the cheapest. So that makes sense.
Yeah.
Now this chart is very bullish. Very bullish. Upper end of the channel is 62.63. Now we don't trade NQ futures, obviously, and stuff, but this is a good proxy on what's going to happen, right? So that's the reason why I post the NASDAQ charts. Again, multiple long tail hammer reversals. Case in point, the NASDAQ futures obviously are higher, right? Numerically higher, 6,200 and so. So they have wider fluctuations numerically speaking. And the NASDAQ includes both tech stocks and biotechs. But most of the weighting on the NDX are on the heavy side of the Google, the Amazons, the Apples, and such. Everyone clear on that? That's the reason why I show this chart. So that you guys have an idea what's happening overall in that particular sector, so you don't freak out just because one of your stock falls a bit. Am I clear on that part?
Yes.
Okay. Any questions, just feel free to ask me. So this is heavy volatility. Why?
So Frank,
Yes, go ahead, Nicole.
I have a question.
Go ahead.
So even when I'm doing my trading, I never track the futures. Should I be doing that? Because I see you have it here. Like I never.
Well, let me just
do
put
that.
you joined about 2 weeks ago. You've seen repeatedly I chart the futures and I try to give a directional bias to the markets, right? So
Right.
so if you'd like, do it, or absolutely. But futures charting is tricky business. So just for now, of course, I encourage you to do, yeah, absolutely. But in the meantime, try to understand the ones I'm putting across so that you can see, so you are more prepared what might happen on the front end of the market if the futures are doing a certain thing on a certain day. Yes, futures stuff, yeah, it's critical. It's critical, but it's not easy to it's not easy to chart futures. That's why I do the hard work of doing it. You start charting futures, they're so volatile. Look at how volatile this is. You know what I'm saying? Does this look like a normal stock chart? Does this look like
No.
Absolutely not.
It's a lot of volatility.
Lots of volatility because there are multiple stuff happening. On a certain day, the Amazons and the Facebooks will be up, and Regeneron and Biogen will be down like 30 points. So like, whoa, what's going on? And they're all in the NASDAQ, right? So that's
Right.
so that's why they're so volatile. So just follow the pattern and stuff that I'm showing. So this is where we were, guys, just to show you that that charts alone cannot tell you what's going to happen on earnings. Okay, this is an exact point. So here we were trading a range, we were doing fine, and then the market dropped out of bed on Wednesday. Then it climbed very rapidly. We caught the move very nicely. And then on Thursday, right before the Google and Amazon earnings, this is where they closed at, right there. So if you look at the pattern, we were in a trading range. That's why you have to just, what I'm doing is just breaking down my chart. So we're in a trading range, broke down below the trading range, created the lower trading range, and then all of a sudden this was the little flash crash on Wednesday night, which turned around very quickly. Remember, crashes at open are nothing but money-making opportunities. Telling you right now, depending on whether it's within the range. If you wake up in the morning, you see futures down 30 points or 20 points, and you're like, oh crap, here goes. Well, that here goes can translate into serious money in your pocket if you are a tactical trader trading my charts and my alerts. Done it way too many times. And that's the point, that the average retail trader does not touch and buy cheaper prices. I don't see why, on a technical basis, many of you or some of you never buy cheaper prices. It just boggles my mind. They all like to chase higher prices. Well, most of them don't, because then they say, oh my God, missed it. You know, the same old statement that keeps on coming out of the mouth of every single retail trader. Look around on stock twits and other forums that they're saying, oh man, missed it. What does missed it mean? You missed it here because you didn't buy it, and you missed it here because you didn't buy it. You're going to miss it here again because you didn't buy it. Because the charts are saying we're going higher. So what your emotions are telling you means nothing. So let's get back to this chart here. So here was an extremely volatile chart, individual stocks moving up and down. What was happening during this period was we were getting these, all our trading stocks, great trades. We were buying them the day before at certain tactical lows, and right when the market opened, they were all up $2 or $3. Yes? Guys who are real traders, you know exactly what I'm talking about, right? Whether it's Nvda, whether it's Alibaba, whether it's Facebook, doesn't go up $2 or $3. It did the other day, but let's say up $1. Apple up $1, whatever the case, right within the first half an hour of the market open. Yes or no? Any of you like,
Yes.
Yes, sir.
and then what happens within like 30 minutes? Boom, sell
Sells
program
off.
comes in. Exactly. So if you didn't get out, like I said, like take profits at market open, especially on a market that's gapping open. Okay? Because by the time the market gaps open, the NASDAQ is already hitting the upper end of the scale, overbought. So on my charts are clearly showing that. So it's not a guarantee that it's going to drop off immediately, but that's what we saw for a countless number of days, right? For at least 2 weeks. So if you were buying and trading it and then buying back the lows of the day, you're again making money the next morning, or selling out by the end of the day when it started to bounce a whole bunch of points. Look, you can scalp, tactically scalp these trades and still make money. It's not a straight line market. You can see that. So at the end of the day on Wednesday, this is where we were. And then this happened. So what I meant by saying about those hedge funds, they were all like in Mr. Shorty land. Like, let's short the crap out of the NASDAQ. They're all going to miss. They're great companies, but they're all going to be down $100. So they're all, by looking at this chart, now it all makes sense why it was doing this. They were all short because this is what they were doing. This was at 7 in the morning, and this was at 3 in the afternoon. It was 3 in the afternoon, right there. See that red? See that? You guys got to understand this, because after today, your fear level on volatility will be somewhat less than what it was before, guaranteed. Because at least you'll see how these things go on. Everything was fine. The levels were intact, but they were just selling. These are big fat sell programs. So they're all lumped together. So I figured like, okay, if it's going to sell here, I still have major support at this big hammer reversal thing. Hammer reversals are not just a term, guys. It's a very powerful formation where billions of dollars are bought or short covered at that level. That's the reason why they look like Chinese firecrackers, or known as hammer reversals. So don't take it lightly when I say there are major hammer reversal formations, or I'm showing them on my charts. Don't take them lightly. And if you and many of you like oh, okay, well, or you're okay means you just made nothing. When you could have, the easy money is made right after these reversals happen within a matter of 15, 20, 30 hour, 2 hours. Every single time. Mental calibration, guys. To a lot of you, this is all very new. Like, whoa, I never looked at the market like that. Well, you didn't know cluelessly trading either. So, you're all used to the same old alert services. Oh, buy this. There are sweepers coming in. Okay, that's great. If we could all make consistently rich money because we're following what other people are doing, it's the fastest way to be in the doghouse. Okay, trust me when I tell you.
Agreed.
Yeah, exactly.
Agreed.
So the point is, those are good information. That such and such amount of calls were bought here, or this and that. That's a lot of services who basically provide that type of information, and that's fine. You can look that up on the options table yourself, to be honest with you. But they make a living out of doing that. They're not really traders. They're information providers, in my opinion. So it's good. So if the charts are matching with what the sweepers are doing, you know what sweepers are, right? Call buyers or put buyers on a certain strike on a certain stock. So if they're doing that and the charts are matching, bingo, then you have a winning combination. Otherwise, just following sweepers, yeah, whoopee, that's exciting. Because a lot of times they're nothing but fake trades that are put out there by algos. Anyway, this is looking really good. That's your NASDAQ. Now, this is your Google. Multiple channels. Google did have a large reversal tail, which was interesting. That's a reversal hammer. It's not red, but it's a reversal hammer. It hit a high, excuse me, it hit a high of 1062 off my second channel, third channel, and it ended the day at 1035, right there. So this pattern on itself, is it bullish or bearish? Just looking at it.
It looks bearish.
Anyone else like to?
Because there's a huge profit taking up top.
That's right. That's known as a spinning top. Yeah, Trent said bearish too. Yeah, it's bearish. It's probably not bearish when it comes to Google. Okay, this is a daily chart. Excuse me. And the 1 hour chart is just simply showing you a minor movement as profit takers came in. Remember, there's a finite amount of money in the market, right? There's a lot of money sitting on the sidelines. Ask grandpa, nobody's in the market, trust me. So this money was freed up, in my opinion, by the hedge funds who played this, got short squeezed, and probably shorted a little bit up here. They probably freed up that money to play other earnings. That's my opinion. And because money rotates from sector to sector and stock to stock. All right, that's just the reality of the market. All right, let me just say 1 second. Let me get a glass of water. Hold on. Okay, you guys there?
Yep.
Okay, now let's move on. Hey, look, from a trader standpoint, Google's yesterday's story. Earnings are out. Let's move on to what's coming. That's the way you got to think. Yeah, you can trade Google, but the juice is out right now. Boom. It was up a huge. The trades work. Let's move on to the next one. That's the way you got to think. Amazon, same story. Can you trade Amazon for a whole bunch of points? Sure. But it shouldn't be a priority trade. It shouldn't be a priority trade because the earnings are out. The really aggressive hedge funds, the ones who trade earnings, they're like, okay, Amazon's out, we can trade a little bit, but let's move on to what's coming. That's the way you got to think as a trader. So here was Amazon's chart, which we were trading, and you can clearly see, despite massive volatility, the stock was basically looking like crap here, to be honest with you. All right, and it was trading between a very tight range, and we prayed this moves. It was moving a very tight range between, you can see that through my lines, 981, and the lower end of the range was 968. You're talking 13 points. Guys, right before earnings, this is what it looked like. There was a sell block of, and you have screens, you can see this.
Almost looks like a bear.
It was 1.6 million shares. That's 1.6 million shares that was sold or shorted at 3 p.m. Remember the news came out? Okay, we played this. There's a big move up. And that was when the, what do you call it? We had mostly setups, but I was buying it from a couple of days ago. But so bottom line is that this was the news about the pharmacy, that they got 12 pharmacy licenses. Stock shot up $7, right? First it was up, then it was down, and then it shot up $7. It gave back all of that almost in the next hour. And then it did this. That's why I was saying that a good portion of the really fast hedge fund money got obliterated. Obliterated. They were done. Okay? That's the reason why the stock moved like that. Let's move on to what's coming. Let's look at Facebook. All right? This is a long-term chart of the stock. This is a monthly chart of the stock. I'm just showing you this chart because it's cutting out all the noise. All the noise that comes from looking at 1 hour charts and daily charts and stuff like that. This is a major bull flag formation. Upper end of the bull flag is, remember, this is a monthly chart. That means it's what it does on a monthly basis, right? That's what it is. This was the month of July. Month of July, you had a beautiful flag formation. Boom, breakout. Now another flag formation, and it's breaking out. Upper end of the move is The upper end of the move is based on just purely based on the channels is roughly about 193. Phew, Facebook up 20. Whoa. Some people, position yourself right, you can make a lot of money. 193 is the upper end of the channel. Right there. You guys can see it. Can it happen on earnings? Anything can happen. Downside. So that's your upside, okay? I don't think it's going to be up 20 because up 20 means the stock is going to be up what? 20 divided. Facebook closed at 177. It's not up 20 actually. It is more like what's the number? 196. Yeah, that's up 20. So 20 divided by 177. So that's a move of 11%. That's like an Amazon type of move. I think it's too optimistic. 11%? Come on. But even if you get 5%, you'll basically get up halfway there. 11% is a lot. So your upside. What? Yeah, no, 180. I'm sorry. Facebook is.
No, actually, no.
185 is very doable. 185
yeah,
is
at least 185. Yeah.
yeah, 185 on the upside is very doable. So that's a realistic number to work with. All right. But when you do options and stuff, don't buy like, whoa, 185. You got to buy like close to the money calls. So if it doesn't go there, you can recover a portion of your money. You understand? Like I know people who are buying 190 calls. Like great, if the stock really moves, that 190 will go nuts. Just the way the Amazon 1030 calls went from $3 to 75. I mean, that's unheard of. That's because the stock moved like that. But I'm not, so that's like an outlier possibility. But if the stock doesn't move like that, those calls would be zero. Even if it moved up, let's say $30, right? It'd be zero. But because it moved like that, it dragged the 1030 up to Kingdom Come because the stock went to 1100 and change. So what's the downside? The downside is this red line here, and that's 160. So if you see the stock fall towards 160, you need to be a big buyer depending on how the candles are forming. And that's my job to basically tell you guys. So, is it possible that the stock can drop $15 right after earnings? Absolutely. Absolutely. But that $15 will be soaked up based on the candle formation and based on the big money, the mutual fund money, who love Facebook, who are going to be buying the crap out of it at that level. All right. So 160.57, this red line zone is sort of maximum. If it breaks that, I'll short it. You can short the stock at that point all the way down to about the 150, 155 level. You have to be quick, but it can be done. So that's the simple analysis. That's the simple analysis. Trent, next time get a mic so we can hear you because I can't really read these comments that much because I just looked at it. You said large volume also. On which one? On Amazon? When we were explaining, because yeah, just have a mic so we can communicate a little bit faster. All right, let's take a look at this. Aapl. Make this quick. I don't know what to say. I mean, every single metric, that's a wild, most bullish pattern I've seen. Now keep in Aapl, keep in mind in Aapl that when Aapl was falling, and we had people in the group who actually had shorted some lottos, and they made some real money of those right here when it had dropped that last Wednesday or something like that. Actually, before that, on rumors that the Apple iPhone 10 didn't have much demand, and all these lies that a lot of the times they spread to short the stock. Hedge funds do that a lot. Just spread some stuff and hit the stock. The thing is that they said, this person said, I'm going to short this stock at 155. This is definitely going lower. I'm like, great. Why don't you see how the stock reacts on top of this red zone? This red zone is a gap fill, right? It was a gap fill. So see what the reaction is right here. Because if it breaks that, then you have another gap fill right there. You see that? There's a gap. That's why I drew this thing here. Not for making the charts looking prettier, but that's why I drew it. So that's your next level of contact, 154. And if it breaks that, then we're going to 150. Guys, Apple is a very controlled stock. Wall Street loves Apple. Doesn't matter what these analysts say. Apple pays a dividend. Apple can be just bought. Apple is being bought as a dividend play. Okay? Apple pays a dividend of more than 2.5%. Yield is 2.5%, $2.50. And I think the overall rate on Apple is like 6% a year if you buy their bonds. So who the heck, if you're a value fund manager, why wouldn't you buy Apple and make 6% on their bonds and on the stock make 1.5% just for sitting there with the prospect of the company growing more? It's a win-win situation for value investors. That's, so don't expect Apple to like die someday. So even if the growth slows down, their stock price is still going to be up there. Simple. Because you can sit on Apple bonds and make 6-7%, and Apple's not disappearing anywhere. It's a heck of a lot safer than buying a sovereign bond out of Turkey or some other place, making 13%, and the next day the Turkish government basically slaps you down and you get no money out of it. Seriously, it's happened. It happened in Russia too. So why not buy a real American company, make 6% on their bonds, and 2 or 1.5% on their stock, and have the potential for that stock to go higher, which it does. So let's look at this thing here. Real simple. I don't know how to explain this, but it's right there. You got 163.97, another dollar or so, and then you got the all-time highs here. Now, looking at the sharpness of how fast this moved with huge volume, with this type of candle, what I do is I look to see when the last time we saw a candle of that magnitude, and it's tough to find, guys. Here, and that was the third day, fourth day. This is the first day. This is the first day. The bottom line is that if things work out with Apple on Thursday, you are basically looking at a max move of right there in that zone. That's why I have the red bar of 168 plus possibly 170. I can't imagine Apple being up $8. I mean, the Dow Jones will hit 24,000 plus just like boom, right there the next day.
I think it goes higher.
Hey, if it goes, good for you. I don't know. Seriously, that's too much optimism. I don't blame you. I mean, I'm with you. I mean, I'll be long Apple with a straddle on the short side. So, but majority long, right? And Apple options are cheap. And if your feeling that it goes higher is good for all of us. But based on I'm just following my charts, and this is extremely bullish. Extremely bullish. So even if it kind of moves sideways a little bit, this is a flag, right? And creates a flag. There's a high probability that flag is going to be broken to the upside. So that is a very high probability. If it breaks below this range here, this line, which is 161 or so, then there is a good chance that the stock comes and retests this breakout again. This breakout, Friday's breakout.
Okay.
So all those lines are there. So I know what my downside is. I know what my upside is. If Apple completely disappoints, then it will be. By the way, people keep on asking me if they have access to tonight's webinar. I have said it before. I'll say it again. This is a free ACS webinar for all my great members. It will be uploaded to the YouTube channel. You can listen to it, and your friends can listen to it, and whoever wants to listen to it on my YouTube channel, that's the answer. I just got a text from somebody. He's like, so that's it. Free all of these free ACS stuff, which is the weekend stuff, is always put on the YouTube channel. All right, so let's look at this. If it breaks, it better hold 155. Okay, and if Apple falls, let's say for example where it is, 163. I'll show you the bearish side, and it falls down, and it falls $6. You know what the market's gonna do? You're gonna have a nightmare scenario in the market, short term. It's going to be like, oh my God, we're down 400 points in the Dow, like boom. just like that. It doesn't matter what you're in. You're going to be like, whoop, straight down the into the tunnel. Just warning you guys, all right? Don't take anything for granted. I'll be watching for all kinds of signals and everything. But if Apple falls $3, $4, $5, $6, you are down. You're in for a whooping on the market. Every single stock, aside from some selective ones, which will try to be green. But tech stocks, boom, for no reason, just because Apple. Because Apple is Apple. Apple is hardware. It doesn't touch the artificial intelligence chips, this and that. But it'll take the whole NDX down. And that NQ futures will look like a lovely red fat candle all the way down. And everyone's going to be back to complete terrified mode, just the way they were here. And that's when we'll be buying bargains, just the way we always do, based on our charts, not on our emotions. So just warning you guys, this can happen. All right? It's not the end of the world. It's the beginning of you making money. But I have always been there 24/7 during the trading day. I have never left people alone to fight the wolves. And I've always been doing that. Appreciate that, guys. All right? All right, let's move on. So that's Apple, looking very bullish here. Do I expect Apple to go all the way to 170? I personally don't. But it can happen. If Tim Cook is saying that iPhone 8 numbers were just off the charts, he doesn't normally talk like that. He's not Donald Trump, right? He doesn't normally talk like that. He's a very conservative guy. So I don't know. Maybe it can. But technically speaking, this is a very bullish formation. Significant amount of short covering and new money went into Apple. So it is possible we draw a bull flag and a breakout. It will find resistance at the previous high, which is 165 and change. So you will see sellers coming in there. You will see sellers coming into 165 level, and we shall see. And I'll certainly be there to put in the right alerts and stuff. But don't go crazy on it, because going crazy is basically not a smart thing to do. Nvidia, I'm very bullish on this stock. Okay, this is a monthly chart on Nvidia. There is no zigzag. It is consistent buying. This is what a great long-term investment looks like. This is what a great long-term investment looks like. No zigzag, no, this is none of the, which is other monthly. This is a solid long-term investment too. But there were big drops too along the way, right? In 2016. Look at this. Oh, that's Apple. That's short-term. So that's why it's, I mean, this is, what more can you say? Like, since they said they're going to build artificial intelligence chips, that was back in April, and they went from a basic gaming company making high graphics resolution graphics cards. I have them on both my computers. They're really, when you're running so many screens, you need very high resolution cards to run the graphics. Okay? And the better I run the graphics, the better I can see. Some of you like scream and go for those adult diapers and all that good stuff. I'm just kidding. So the bottom line is Nvidia went from a graphics chip company to becoming a player in the world of artificial intelligence. That's like me getting really smart and building a rocket, okay, which is never going to happen. So bottom line is, this is what it looks like. So it's in a different world right now. Now this is a powerful bull flag, monthly, right? Broke out. Doesn't matter what happens one day. Doesn't matter what happens every hour. Yes, we trade it. We trade it for profits quite frequently, but from a swing perspective, the stock is eyeing this level here, which is around the 215 to 220 level. Nvidia closed at a new high at 202. So I'm not saying it's going to 300. I'm not saying it's going to 400, like crazy stuff that you hear sometimes when people get too bullish. But realistically speaking, the stock could hit upper end of the scale is 230. It's possible that it's up 30 points?
It's Nvidia.
30 points is, you're right. 30 points is 15%. 30 points is 15% on the stock. Is it possible Nvidia goes up 15 points? Possible. Now, what's the downside? They're very, very possible, seriously. Because the thing with Nvidia is that other than traders and the investment community, most people don't know Nvidia, right? You can walk into a bar and say, "Hey, I made so much money on Nvidia." They'd be like, "Who the hell is this?" And you walk in a bar, like I'm giving you a stupid example, and you say, "Hey, I own a lot of Apple. I made a lot of money on Apple." They'll be like, "Yeah, buy us a drink," right? Or like, "I own Facebook and that stock's been great," and they'll be like, "Okay, buy us a drink." You walk in there and say, "I own Nvidia. The stock's doing really well for me. It's a little crazy at certain days, but it's really making money." They'll be looking at you like, "What?" It's not known. I'm serious. It's not known. It's not known. Names that mom and pop don't really know about, those are the stocks that go up. That's it. That's like, believe me when I tell you, it's not known yet. It's not a household name. Try using Nvidia when you're walking down the street. People are going to look at you funny. Most people. Some people will know. You understand what I'm saying? This is the psychological behavioral aspect of the market. Nvidia has more room, in my opinion. End of story. Questions I'll take, and then we're going to wrap this up. Futures are down about 450. So let's see what on the structures, what it looks like. This is what it looks like.
So I have a question, Frank.
Sure, go ahead.
So, okay, so short term, if you're trading and say you're doing weeklies and the stock gaps up, you sell immediately.
Immediately. I sell at least most of it immediately. I don't sell the whole kit and caboodle, but I'll sell most of it depending on how much it's gapped up and how much I have from the previous day or the last couple of days. Now, if I don't completely bring down the position to zero, because I will have different strikes. I will have current week and following week. Remember, last week I was basically saying October 27th and November 3rd, right?
Right.
So this week, depending on how it goes, I'm going to be talking about November 3rd and November 10th, if not November 17th on some of them. So it gives me time. Time is important. So the ones which are directly this week and they jump up that much, then you got to take some of it out. However, if it keeps on jumping, as we saw on Friday, then obviously the ones which are the current weeks are the ones which are delivering the 2,000% type of moves. You get it?
Right.
Exactly. Right. That's something we can't control. This is the one thing I found out about options trading overall. Because it's a high dynamic business and it's affected so much by short-term price movements that if I use too much discipline, I leave way too much money on the table. You understand what I'm saying? Like I have a discipline. Okay, there's only 1 day left for expiration, so I got to take down most of it. Well, then Friday happens. You understand what I'm saying? And the guys who held on, they're like, "Wow, man, this is it. I'm a genius." You just made yourself, the things going from like 20 cents to $3, and they had a bunch of them, and you know how much money somebody can make of that stuff, right? So there's always that risk, and the markets know it. That's what I'm saying. The markets know it because these machines can calculate the cluster of calls and puts within 1 split second or 1 nanosecond, 1/100th of a second, what would normally take a human market maker. You understand a market maker, right? The person who basically is, sort of in charge of doing the options. Yeah, the market maker, what would normally take him a full day or a bunch of hours, now the machines are calculating in 1/100th of a second. So what they try to do, they try to freak us all out of that trade. And you will see this happen over and over again. They try to freak us out of the trade. They know that we're thinking, "Oh my God, there's no time value left on that. So if it doesn't work, I'm going to lose all my money." And then they just ram it the other way. They did that with Apple. They did that with Nvidia. They did that with Facebook. And these didn't even have earnings on Friday. They didn't even have earnings. The Apple calls, which were at 8 cents the day before, the 160 calls expiring on Friday, right? They printed a high of $3.65. That is sickly disgusting. That is beyond nice. That's not nice. That's not nice. Come on, don't say nice. Nice is when somebody, you get $100 gift. When somebody gives you $1 million gift, you don't say nice. Okay? You say, "I want to marry you. I want to divorce you. I want to marry you again." Whatever you do. All right? That's not nice. That's obscene. So the machines kind of, do that type of stuff. So the point is, I don't know how to give you a direct answer to that. So the best way to do it is if they get really cheap and you say, okay, fine, if they go, they go, I don't care, then chances are you'll make a lot of money. That's what I've found in these type of markets. That's what I've found. Now, depending on the overall climate, if it's a monthly options expiration, whether it's a Friday before a certain holiday, things like that, the higher probability that those things are going to work. So I'll try to be as direct as possible in mentioning the thoughts on that, but it is difficult to kind of explain whether or not the lotto will go up 5,000%. But again, we have another situation arising on the lottos, coming lottos for this Friday, right? Because all these big earnings, Apple, Facebook, these are all on Thursday, correct?
Right.
Alibaba, thanks for reminding me. That's the one I was thinking of. I'm like, where the heck? Okay, 1 second. It's all here. So we might have another one of those situations where cheap goes really, really pays the bills this Friday. Because remember, once earnings season dies down, you're not going to see these type of moves. You understand what I'm saying, Nicole? Once
Right.
earnings season dies down, it's going to be like, oh, yawn, back to like, back and forth, like small dollar trading, as in like movements. Tough to find these type of things. This only happens during earnings. Okay, fantastic looking chart. Called it all the way here when the stock was falling apart. Broke to this gap, all of a sudden, one day down $4. Anyone ever tell me why? I don't know why. I looked around for it. If you follow the old-fashioned rule, like what's the news? Like, did Jack Ma, like, did he do something stupid, or what happened? Did they sell counterfeit machinery to somebody in Iowa? Like, nothing. There was no news. They just dropped the stock. But this is the beauty about technical trading. Tell me if this and tell me if this does not look exactly the same from a technical perspective. Just look at it. Just quickly look at it. It looks exactly the same. Exactly. So that's what you do. You buy the charts. Now I'm saying buy it here because I'm looking at this big gap here. The stock is basically holding that gap. I expected the stock to hit, believe it or not, 166 because that would have fulfilled this whole move. But it didn't do that. It kept on fighting this gap and then boom, started to go. And then this happened. So this is very bullish. Now there is, I have a downtrend line. It's above the downtrend line. It's looking like a bull flag. Not bull flag, it's not like they work 100% of the time, but still. The next level is at looking at 180.04 to 194. Now here's something you got to keep in mind, Trent, all right? Baidu earnings? No, this had nothing to do with Baidu earnings. You see, this is where you guys go wrong. Baidu crap, and I didn't even touch that baby. You know that, okay? I didn't recommend it. I don't look at Baidu now that much. I'll look at it. So, and Baidu was one of my best trading stocks. Baidu crapped apart. Alibaba went the other way. Just because they're Chinese doesn't mean they're all going to fall together. Because Baidu is not the biggest component of the Shanghai market. Alibaba is the Amazon of China and Asia. You know how Trump says? Asia. He's going to be in Asia next week. And it's going to be a good week. No, seriously. Do you know 40 major U.S. corporate leaders, CEOs are going with him? He'll have much less time to tweet. And I hope he doesn't tweet some stupid stuff. He'll never do it from there. He's very smart that way. He's going to be extra polite to the Chinese premier. They're going to talk all the time good stuff. And we're going to sign some energy deals. We're going to watch energy stocks next week and the week after. Because good old Donald Trump is going to Asia. And he's going to cut, and he's taking 40 major business leaders, the finest minds in America, with him. You think they're going there to have dumplings? Nope. They're going there to cut $1 trillion worth of deals for energy companies primarily. Think. All right? So it's going to be big. So I'm going to be picking and choosing a couple of these. Because they cut those deals, bang. The energy sector is going to rally. Natural gas especially. So anyway, coming back to this, what do you see? I see pattern symmetry completion at around 179. You will find right at this point, remember this was the uptrend line. At right when it tries to enter the uptrend line, you're going to see a lot of volatility. Why is that? Sell programs will come in hard. Does that hard mean it's going to crash and burn down here? I don't think so. But what do I know? All I know, this is a very nice double bottom. This is known as the inverse head and shoulder. So even if it pulls back here, or even pulls back to 174, this stays as a left shoulder, as a right shoulder, as a head. And there you go. That's your neckline. This is your neckline, this gap. Okay? Once it breaks the neckline, it's just going to jump $2 real fast. You get too excited when it's up $2, you are going to get hit. Boom, sell programs will come in. Just the way it works. Can it, on earnings, can it go all the way up here? Yeah, I have a feeling they're going to completely blow out the numbers big time. So what does that mean? Does that mean it's going to $300? Yeah, maybe in due time it will. But it means that this broad channel, everything's in this chart. Everything you need to know. You just have to read it right, okay? That's why I'm doing this stuff. Look at this chart. If it enters this zone, this is the ultimate bear kill zone. You know what a bear kill zone? I'm not talking about the upper Adirondacks, all right? We're talking about bear kill zones on charts. I'm dead serious. Okay, this is when it enters this channel and it's just like, oh my lord, it just goes and goes and goes. It drops like maybe 50 cents, boom, goes higher. This is this channel move here over 180, over, I would say more over 181, and more importantly over 184. You can just shoot fish in the barrel and just hold on and buy every dip till it gets towards 190. Now, in order for that to happen, we need to see very large, this type of big bullish engulfing candles. That is telling you that the big money is rushing in. Looks like they have started to rush in. Looks like they've started to rush in. That's why this happened. Okay? So you will, if things go right, then you will see the stock hit that 180 level or so, and we will see how it reacts around here. If it breaks above that, then basically it's all there. There's a high probability it's going to basically go higher than that. So that's it, guys. Wow, it's 10 o'clock. Okay, I gotta wrap up. This is 2 hours. This is way too long. That's it. I'll see you guys tomorrow. We covered quite a bit of stuff. Start tracking the chart. Start looking at the stuff I'm putting out there. You cannot survive this market by looking at prices. It's tough to break old habits. I know that. All right, trust me. And in life as well as in trading. But the sooner you break those old habits and start picking up these new ones, the better off you will be. All right, and that's a given. On that note, God bless you all. See you guys tomorrow.
Thank you.
Thanks, Frank.
Anytime. Bye bye.